Bismillahirrahmanirrahim. Assalamu alaikum. Welcome to today's session. Now, I'm going to start that particular session with a particular picture that's right now viewing in front of the screen. So, with all my lecture, the important point is that even you are taking the live session or even you are watching my video, if I'm asking some particular question, you must have to reply. And if you have any problem, you must have to ask live or on the WhatsApp. So my important question is that as an accountant, if we view that particular term cautious, so what one particular concept about the accounting must blink in our mind, must have to blink in our mind. What one particular concept? Anything, guess? Any one word. It's not about right or wrong. If I term use the cautious, one particular word that must blink in your mind. If we do recording of the transaction, if we do reporting of the transaction, if we do reporting of the transaction, if we account for the transaction, so we must be very much careful. Very good word. Bayamar. Pinky said attentive. Ubaidullah says prudence. Wow, what an audience. Prudence. You are absolutely right with all the context. That's about the prudence. So before starting today's particular session, let's make some discussion that's about accounting concept. That's about some accounting concept. And you are absolutely right that whenever we are making accounts, so one of the concept that is called prudence. And we are actually account for the transaction. We are actually report the transaction with the prudence concept. And the prudence concept says even all the concept of the accounting actually with viewpoint of investor, with viewpoint of user of the financial statement. That's why the concept says that make the accounts, prepare the accounts, report the accounts with the realistic manner. And one of the realistic issue that's called prudence concept, applying prudence concept. Although more methods also exist, that's going concern, for example, going concern, accruals. That accounts is not based on cash but on accrual. Going concern, matching principle, economic reality, substance over form. All these concepts actually reflecting that the accounts must be realistic, using common sense, and for the sake of the user of the financial statement. So one of the concepts that's called prudence. I know that you people know very well. Prudence, what is the meaning of the prudence? Prudence means prepare the accounts, report the accounts where not to overestimate revenue or not to underestimate expense. Not to overestimate revenue or not to underestimate expense, or the revenue parallel with asset, expense parallel with liability. If we connect the revenue, we must say that we must be conservative in recording the asset. Conservative means very cautious approach. Means asset must not be exaggerated and not to underestimate the liability. Not to understate the liability. So this result, the conservative statement of the financial statement. Yes, we can say that if the accounts are prepared in a manner where liability must not be underestimated and the asset must not be overestimated. That means we are preparing the accounts with a conservative approach. Conservative means prudence, cautious, not to exaggerate the profit, not to exaggerate the revenue. And if it's something about the expense or the liability, try to report it, not to undermine. This is for the user of the financial statement. Yes, we always think this point as a maker. But today I am discussing the point with viewpoint of the investor. With the viewpoint of investor. This is called more realistic approach. Sir, why we are discussing this particular concept? Why? Why we are particularly discussing this concept? Because I wanted to discuss today, I wanted to make a start with a topic that's called provision. IAS 37, the provision. There are 5 components of the SBR syllabus. Number 1, accounting standard. Number 2, conceptual framework. Number 3, performance measurement. 4, ethics. 5, current development. Yes, I have started the topic with the conceptual framework, term, that prudence. But now connecting with the IAS 37 means IFRS and connect with the different accounting concepts as well. So I wanted to discuss more about the prudence. Okay, one of the concept about related to the prudence, that is for liability. I'm just picking the term liability. Okay, liability. According to the prudence concept, prudence concept says that liability must not underestimate. Okay. Liability must not underestimate. So if as a company management accountant, if I feel any expected future expense, then I have to report that expense, that cost or loss or expense as debit and corresponding means associated with liability. That means credit. If I am a finance director, and I'm an accountant, so that means by prudence concept, the prudence concept has given me the license, freedom, that whenever you want to report the liability, report it. For example, I belong to an airline company. And right now in pandemic situation, there is a report in the Financial Times that airline companies will not be able to recover their losses until 2024. Based on that particular report, me, the finance director of a particular airline company, now I'm going to report on expected future losses, debited and liability credited, based on this prudence concept. Because the prudence has given me the freedom, the prudence has given me the license that you can anytime report the liability with your own discretion, no restriction, freedom. Any expected expense you have to report it, because liability must not be underestimated. Candidates, can you people any comment about my freedom? Can you please reply me anything about this point that I've given some example of the airline company? I have a freedom to report any liability. Be participative. Do reply me according. What do you say? Yes, I have a freedom to report the liability like the airline company. Report the liability. One more thing I'm going to add. One of the important shareholder asked me about dividend. I replied, Mr. Shareholder, what you are saying? What about the dividend? The situation is about the pandemic. Next 3 years, there is no expected profit. There are expected losses. I will not provide any dividend because I am going to book the provision. I am going to book the liability, income statement, debit and liability credit. Am I right at this point? What do you say? What is your feeling about this example? Am I right at this point? I have to report expense and liability at all the points. What do you say? Come on, say anything. Even you people watching the video, whenever I ask something, you have to talk with yourself. Any problem, you can ask me on the WhatsApp. Now it's my turn. Now it's my turn. You have provided me good answers. Now it's my turn. Candidates, actually, this prudence concept exists, but IAS 37 introduced the concept about provision. Provision. That means liability. That means liability. Introduce the concept that means liability. And provides some specific conditions related to, or I can say before recognizing the liability, or if you are actually reporting some transaction of the liability considering the prudence concept. So IAS 37 actually refining the concept and wanted to smooth line the things in a manner that nobody use the prudence concept with any self-interest perspective or any misrepresentation perspective. IAS 37 actually is streaming the concept specifically for the liability in the prudence concept. Prudence concept is right not to underestimate the liability, but liability must report if it's meet the definition of the liability and the provision as well. IAS 37 says that provision is a liability. So if you wanted to report the provision, you have to meet, that means you have to meet the definition of liability. And what a brilliant answer by the Amir. That's brilliant. Amir says that if we are going to book the liability or the provision by prudence concept, the estimated future costs are like this. The provision must have to report if it meets the condition of the liability. And the provision is a liability, and the liability definition is about current obligation on the basis of past event. Current obligation on the basis of past event. Okay, done. Current obligation on the basis of past event. Number one, the first thing. This obligation, it's maybe legal or constructive. It's maybe legal or it's constructive. What is the meaning of legal or constructive? We will discuss later. So very important point that if you really want to apply the prudence concept in a realistic way, with full of wisdom. So provision cannot be made until unless there is some current obligation. Current oblige means that is already something happened. Current obligation on the basis of past event. Number two, the second important thing. Future cash flows are probable and amount can be reliably measured. So three things important: current obligation. Number two, future cash flows are probable and value can be reliably measured. If these three conditions meets, then we can book the provision. Candidates, a very important thing. The very important thing you need to consider. For example, I say at statement of financial position, we book. At a statement of financial position, we book the liability, that is bank loan. Why we report bank loan as liability? Because it meets the definition of the liability. Now apply bank loan with this definition. Is the bank loan current obligation? Yes. Current obligation means always the current obligation is based on past event. So number one, current obligation. Current obligation means we are obliged. Okay, number one. Number two, future cash flows means we have to pay interest and we have to redeem the loan. That's confirmed. Amount reliably measured. Okay. Same case. If I say accrued expense, for example, at balance sheet, electricity bill, utility bills, we have consumed but not yet paid. We have consumed but not yet paid. Accrued expense. Is this liability? You must say, yes, sir, it's a liability. Accrued expense is a liability because it's current obligation. What is current obligation? Because we have used the utilities, and that's already on basis of past. Current month we have already used, and we have to pay in future cash flows, an amount reliably measured, accrued expense. But do remember that their amount and timings are certain. These liabilities amounts are certain. But if I say the liability called provision, whatever we are going to discuss about provision, if we have to book the provision, provision must have to meet the definition of liability. But provision amount and timings are uncertain. Let's take some example. For example, in your earlier studies, the case about legal obligations a legal litigation sued by customer. This is the case. At year end, we concerned with the lawyer. A lawyer says that the hearings under process means your case under the litigation of the court, because you haven't delivered the goods to the customer with the right quality, right quantity, right time, and so on. So number one, is this the current obligation? You must say it's a current obligation. Why it's current obligation? Because something already happened. Current obligation always based on past event. Number one, current oblige. First thing is current oblige. Number two, second important thing. We are currently obliged. Okay. Number two, probable. Future cash outflow probable. Means lawyer says that, for example, lawyer says that there is a brighter chances that you will lose the case. And amount is the penalty, expected penalty. For example, $1,000. So if all these conditions means, specifically current obliged, yes, we are currently obliged, then we have to book the provision. Are you getting the point what I'm saying? Do reply me. One more example. Provision for dismantling and restoration. F7 example. You have purchased a plant. And installed and made installation. Government says that government authority and company, we have made, company has made committed with government to dismantle, DM dismantle and RS restore. the place at the end of life. 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 With this situation, the very important thing, when we install our plant, we are now become current obliged. Whenever we install our plant, we are currently obliged. The obligation has developed on the basis of past event. On the basis of past event. Number one, first thing. Probable, yes. Probable. Probable, whenever we dismantle at the estimated life. One thing, whenever we have to dismantle and restore. So probable future cash flows, yes. And amount measurement. We have to measure the amount accordingly. That means these two examples committed that this is what about we are discussing. The prudence. Prudence means liability not to underestimate. But yes, not to underestimate, but all the estimated liability in terms of provision must have to parallel with the definition of the liability. I am asking one important example. One important example. Listen carefully and reply me. Repair and one moment, please. Repair and maintenance contract. Repair and maintenance contract. One of the examples. Do remember that all the material belongs to your property. All the material belongs to the property of students. You will get access of all material, don't worry. But listen carefully. Repair maintenance contract. Listen. Repair and maintenance contract. What does that mean? Repair and maintenance contract. Listen here. For example, listen. I've started my business back to 2010. 1st January 2010. And from that date, each at start of, listen carefully, start of each year, it's experience, start of each year. Whenever year start, I made contract of repair and maintenance. At the start of each year, I made contract of repair maintenance. Each year, repair maintenance contract to third party, to a company. Always report. Contract. Hand over the contract to the of the my company's repair and maintenance. Hand over to a particular company. Always. For example, $5 lakh each year for my whole company. I am standing at my reporting date. My reporting date is equal to 31st December 2012. 31st December 2020. And the finance director, wants to make provision. Of repair and maintenance contract for the year 2021. At 31st December 2020, finance director wants to make provision for the year 2021. For the year 2021. Do reply me. Is this possible to make the provision for this? Yes or no? Is this possible to make the provision? Yes or no? Everyone, can we make the provision? Yes or no? Because, I am debating with the junior accountants, with the auditors. That prudence concept allow me to make the provision. Prudence concept allow me to make the provision. Prudence concept allow me. How? Because liability must not be underestimated, and I have to make the report the liability. I am debating with the auditor. I am going to book the liability by name provision because prudence concept provides me freedom not to undermine the liability. Candidates, the answer is we cannot make provision. We cannot make provision because your answer is absolutely right. We cannot make provision because it's not only about prudence. If you wanted to apply the prudence with the realistic approach, you have to meet the definition of liability. At each start year, I do provide the contract to a company. But at 31st December 2020, we have not obliged for any obligation, for any liability for the 2021 cost. No obligation. Till now. There is no obligation. If we provide the contract to any of the company, this doesn't mean that we are now become liable to provide the contract next year also. Do remember, there is no obligation here. And one very important thing, you have to clarify, obligation means either legal or constructive. Make it clear. What is the meaning of legal and constructive? Make it clear. For example, warranty. If you sell the product and you mention, if you mention with the contract about warranty, that means it's legal. If you have sold a machine and have mentioned to the customer that, okay, 6 months warranty about any parts, that's legal. But you don't mention but the norm of your business is that if a customer makes complaint for certain parts within 6 months, you do accept the claim, the warranty claim. What does that mean? What does that mean? That means the second one, you don't mention in your formally. You don't mention formally. But it's your norm. It's your behavior. This behavior is actually create a valid expectation to the customer or to the audience, to your customers, to the community. And this action, this past behavior, which creates the constructive obligation to the party, that is called constructive obligation. That is called constructive. So constructive, typically the definition of constructive obligation is about, it's about any past behavior, any action, any communication which creates a valid expectation to the party, to the against party or third party, that is called the constructive obligation. But do remember, either legal, either constructive, something already happened. For example, something already happened. For example, provision for dismantling and restoration. For example, provision for dismantling and restoration. For example, this one, dismantling restoration. Government, there is no commitment with the government. There is no commitment with the government. But the norm of the business, norm of your business is that whenever your project completes, you normally dismantle the plant and restore the place. That is your norm behavior. If this norm behavior is actually the part of the business, so that means dismantling provision, it's not about legal but constructive. But once again, constructive obligation, mark my word, constructive obligation will arise when you install the plant, when you have done the installation. Once you have done the installation, that means you are now become obliged, either legal, either constructive. So obliged is actually based on something already happened. So if any of the student is confused, about repair and maintenance contract, for sir, it's a constructive obligation. No, my dear students, no. It's not about the legal or construct. It's not the obligation. Either legal, either constructive. Either legal, either constructive. It's not it's not the liability. Because nothing has happened. Nothing is past. It's about the future contract that will arise in the future. So I hope that this part is very much clear to all of you. I established the thing from the products and connect with the provisions. Yes, prudence concept exists, but prudence concept must not be misused. That's why whenever we are making provision about the losses, about the cost, there is the clear restriction. Provision must have to meet the definition of the liability that is currently offered. Plus two more conditions. Future cash flows is probable and the value liability measure. All three conditions must be met. Currently applies. Number two, probable cash flows. Number three, liability measure. Any one thing is missing, it's not possible to make the provision. Can you please reply me? Is that crystal clear to all of you? That should be crystal clear to all of you. That must be crystal clear to all of you. That's a key point. That's important. So now you can refer my notes accordingly. These are the notes. IAS 37. These are the notes. Examples overall. These are the points. Okay, now, number one, provision. Number two, it's constructive legal. Number three, examples of the possible provisions. And when to recognize the provision. Number one, definition. The standard definition. What is the meaning of the provision? For what term? Listen carefully. One of the accounting standards called IAS 37. In IAS 37, first thing we are discussing provision. So here IAS 37 says that and define that which transaction of liability called provision. Number one, definition means according to IAS 37, which transaction called provision. First thing. Number two, the second important thing. If the transaction meets the definition. Number two, recognition of provision. Recognition means when to recognize provision, means when to make the double entry, debit and credit. Debit and credit. Debit and credit means when to welcome the provision in the books. Then three conditions means present obligation, legal constructive, probable, reliable estimate. One of the examples. Can you please rate the example very clearly, very precisely? Very basic example. Under new legislation, an entity is required to fit smoke filters to its factories by 31st December 2007. At the reporting date 30th June 2007, entity has not fitted the smoke filters. Once again, the new regulations were mentioned that you have to complete the installation by 31st December 2007. But at reporting date 30th June 2007, entity has not fitted the smoke filters. So, is the deadline crossed? Is the deadline crossed? No. The deadline is 30th, not the 30th June 2007. That means at 30th June 2007, we cannot say it's current obligation. If by 31st December 2007, we haven't installed the smoke filters, then we will say that we are currently obliged. So we must say there has been no obligation the fitting of the filters. No provision should be made for this future expense despite it is probable and capable of being reliably measured. Three conditions. You can say that, sir, two conditions have met. Value reliably measured and it's probable. Then we need to make the provision. No, have to make the provision based on all three conditions must have to be. It's not about probable only and it's only about reliably measured. There is no current obligation. That is the point. So candidates, that is the point. One of the document that is called the provision. This is the provision one of the document that's called my notes. These are my key notes. Number two, during e-notes, there is a reference point, SBR exam alert. SBR exam alert. These are the things. So for this, you have to refer the document of question bank. Go and refer the question bank. Identify the question bank. This one is the question bank. And this is SBR exam alert. September 18, extract question 2A. Whenever you are attempting the exam question, either the part of the videos or where my instruction about you have to self-attempt. The very important thing is that you have to self-attempt by you. First of all, you have to self-attempt. And self-attempt doesn't mean yes or no. If examiner asking you to discuss something, you just write the thing yes or no, and are you be able to get all the marks? No way. You have to draft your answer in a way that I'm presenting my knowledge, connect with the case, with the PAC rule, PAC, plan, apply, connect. So you have 2 to 3 minutes for this case. You have 2 to 3 minutes for this case. Now start. Your time starts now. You have 2 to 3 minutes. Even you are watching the video, just pause the video and start working. And don't feel shy. Start it. Then move on. You have 2 to 3 minutes. I hope that you are getting my voice very clearly. You have 2 to 3 minutes. Let's start. Make up a points. Just write the points on your system on the Word. On the Word or by manual. I strongly recommend to make some points in your system in the Word file. Okay. Okay, now it's my time. Parham manufactures white goods such as washing machines, tumble dryers, dishwashers. The current year end 30th June exit. Factory subsidence. Parham has a production facility which started to show signs of subsidence since January exit. Subsidence means some major faults with the production facility. So that's need to rectify. So this is 30th June exit, current year. That's important. 30th June exit. It is probable Parham will have to undertake major repair during X9 to correct the problem. Parham does have insurance policy, but unlikely to cover subsidence. So one thing is about the subsidence, the major faults, the projects, the production disturbance where need to repair. Other side, the repairs is about the repairs already insured and which is unlikely to cover the subsidence. So insurance is a recovery point you have to rule out right now. We will discuss later. But the point is that for this repair matter, the COO argues provision for the repair to the factory should be made. That's the point. Discuss accounting treatment which firm should adopt to address the issue above the financial issue. Now, two things important in SBR. The first thing is about the knowledge of the syllabus. First thing about knowledge of the syllabus. First thing. The first important thing. The second important thing is about how to decorate your knowledge and avail the marks. Decorate the knowledge and avail the marks. So the point is not only just throw the knowledge in the paper. No, you have to decorate. You have to present in a manner. You have to present in a manner to get the marks. So, sir, how to develop ability to decorate the answer? To decorate the answer. How to develop that ability to decorate the answer? Or decorate means logical sequence of the answer. So the point is that the logical sequence is about that. First of all, start the session. Start the answer with a reference of accounting standard. Don't ever write the answer in this manner to start with provision yes to made, provision no to made. Yes, the provision can be made. No, the provision cannot be made. No, never. You have to logical sequence of the answer. In a simple words, you are actually a presenter. Assume that you are presenter, and in front of you, the audience exists who don't know. Front of you, the audience exists who don't know about the situation or about the knowledge of accounting standard. So what you will say? How to communicate? First, you will explain the principle of IFRS. Then you must say that in our company, the situation is this. For example, you are presenting to the CEO, and CEO is not accounting literate, but this issue about reporting you have to present. Then what to do? First, in front of CEO, you have to explain. About the principle of accounting standard. Then you will refer our case. Our case is this, and connect with this matter of the provision and conclude that either to make the provision or not. This is the way how to answer the question. Are you getting the point? This is not only about just read the solution. First, you have to refer the provision. Means the first thing, you study that case and you have to plan this. Plan in your mind. Okay, this one is the case. Then after planning, you have to apply the knowledge. The first thing is knowledge. This is about knowledge. You have to present the knowledge. Knowledge means accounting standard. Provision, IAS 37. It's not compulsory. It's not compulsory to mention the complete name of accounting standard. You just say IAS 37 says that. That's all. And you can write with your own wordings. IAS 37 states that provision only be recognized if these conditions. And then case. No provision for the repair factory should be made because no legal or constructive obligation to repair the factory. The case of the repair, we don't have any obligation. The expenditure could be avoided by changing the nature of operations. It has no present obligation of the future. Candidates, can you please reply me? Are you getting the point? It's not about the case. Sorry, it's not only about the accounting standard. How to respond about the accounting, how to respond the case, how to write the answer. Are you getting the point? Two things important: knowledge and how to apply knowledge of the syllabus and how to Make a logical sequence of the answer in the exam. Even you people are watching the video, you must have to coordinate with me about the cases, about the issues, whatever you feel. Candidates, this is what about the first part of the IAS 37. And for that particular video, that's over. Thank you very much from my side and wait for the next lecture. Okay, thank you very much. Assalamu alaikum.